So let me first say that in August, there was a lot of focus on national security risks, particularly as it relates to China trade. And the economic data just got so weak, Kelly, that it's starting to force policymakers to pivot and look for at least de-escalation. So as the president goes into the United Nations this week, he's going to be looking to sign a deal with Japan. He's going to be looking to sign a deal with India. I think they've made great progress there. And we're seeing continued improvement between the president and House Speaker Nancy Pelosi on NAFTA ratification. If we can take some of that uncertainty off the table, it then allows you to focus on these negotiations with China and see if we can get something around October 15th. And I think a lot of what Steve Leisman was talking about the Fed will be contingent on how those talks go in China.
That's a great point.
It's all interconnected here.
Yeah.
But I think the president's going for 2 or 3 big wins this week at the UN.
And Jason, we know he likes bilateral trade deals better than the others, and we shouldn't overlook the positive impact that can have on the economy. But it's ironic that, as Dan put it, you had to get the global data so bad that everyone can come together and be friends and I guess come to some agreement. Is that priced into the market now, though?
Look, I think what you're looking at here is really the tale of two sides of the Atlantic, as Bob Pisani pointed out. I don't think that the data in the U.S. is weak enough to really push politics at this point. So, you can look at polling data, you can look at sort of how the Democratic race is unfolding. But ultimately, as we look at markets here at Thornburg, we're looking longer term. And for us, the most interesting thing about the last couple of weeks was that you saw some of that real rotation into value. That was really from a rates trade, right? So rates started to rise as they come back. That's reversed somewhat.
Right.
If the Fed is going to keep cutting, that's the real question is, are we really just in a rotation? Are we in insurance cuts? Are we now at a point where they're starting to price in a recession in the U.S., one which we really don't see on the near-term horizon?